everyone, welcome to my channel. I'm Doris. I'm here to show you my stock account update. Today my stock account has made a loss of $754 US. US stocks closed slightly lower, market focused on the First Republic Bank acquisition. So first let's take a look at my account. Today, United Natural Gas made a loss of 3.57% to $6.76, and SPXU showed a gain of 0.31% to 13.01, and SQQQ made a gain of 0.31 to 29.05. The market generally closed mixed. Dow Jones Industrial Average closed down 0.14% to 34,051.7. Nasdaq Composite closed down 0.11% to 12,212.60, and S&P 500 closed down 0.04% to 4,167.87. Today, Internet Retail showed a loss of 2.20%. Semiconductors showed a gain of 1.34%. U.S. stocks closed slightly lower on Monday. Investors continue to assess the news that First Republic was taken over and sold to JP Morgan, wondering whether the regional banking crisis that has worried markets since March has been fully contained. All three major U.S. indexes have rebounded sharply from the recent lows, when the U.S. stocks fell sharply during the banking crisis. The Dow is up more than 7% from its late March low, and the S&P 500 is up 8%. The Nasdaq Composite rose 9%. JP Morgan will acquire all of the deposits and the vast majority of the troubled First Republic, according to a press release. The California Financial Protection and Innovation Bureau said on Monday that it has agreed to sell its assets to JP Morgan Chase. First Republic Bank is the fourth bank to fall in the U.S. banking crisis and the second largest bankrupt bank in the U.S. history. JP Morgan Chase's acquisition of First Republic Bank is the latest effort by the Federal Deposit Insurance Corporation to boost consumer confidence in the banking system. Both Silicon Valley Bank and Signature Bank were taken over by the FDIC last month after both banks were run out of their customers. JP Morgan CFO Barnum said, "We're not actively seeking to buy First Republic, but the deal does have benefits, and it'll help stabilize the financial system. We'll do our best to retain our First Republic customers." Barnum said that First Republic deal does not change the possibility of a recession in the U.S. crisis. Within the weeks, banking firms such as Silicon Valley Bank, Signature Bank, and First Republic failed, prompting speculation about the health of U.S. regional banks, especially those with largely unsecured deposit bases. U.S. banking system reportedly increased emergency borrowing from the Fed for the second straight week, showing continued pressure on the financial system. Last week, the New York Fed reported that the financial conditions in the region have deteriorated sharply. First Republic Bank reported last week that deposits plunged by more than 40% in the first quarter. Its earnings drive further down already troubled shares. News of the takeover and takeovers of the First Republic Bank could still add fears of the U.S. financial system and face more uncertainty about the Fed's rate-setting meeting later this week. The Fed is now widely expected to raise interest rates by 25 basis points this week, with an 84% probability of CE's Fed Watch tool. However, the rate hike is likely to be the last of the Fed's tightening cycle, and the markets are expected to closely monitor Fed Chairman Colin Powell's latest comments this week and future paths of monetary policy. Fed will hold on to its monetary policy meeting this week, and Michael Wilson, a prominent Wall Street short and strategist at Morgan Stanley, said the hawkish Fed will curb U.S. stocks again. He believes that investors with hope that the Fed will cut interest rates in the second half of the year may be disappointed later this week. Markets are now expecting the Fed to raise interest rates by 25 basis points on Wednesday, the 10th consecutive increase since last March. Michael Wilson said, "If the message from this week's policy meeting is more hawkish, it could have a negative short-term impact on the stock market." He says that if Fed Chairman Colin Powell's comments are true, bond markets' expectations of a Fed rate cut could be repriced, making it more in line with Morgan Stanley's economist. He said, "This could ultimately be a negative surprise from the stock market, especially given the rising price pressures we saw before the policy meeting, and that this meeting was one of the least talked about meetings in recent years. So far, more than half of the S&P 500 companies have reported earnings, with 79% beating expectations and 72% beating sales expectations. S&P 500 companies are expected to fall 3.7% in the first quarter, down from 6.7% decline forecast on March 31st. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.